Hi everyone, this is Rob Roy and welcome to the Elliott Elite U.S. Market Update. A couple of things to talk about as we take a look at the chart ending the week in the U.S. market, the S&P 500 to be exact. As you know, we look at the cash index, the SPX, and the SPY, which is an ETF that tracks the markets. And we talked last week about the relabeling of the move from a wave 5 into a wave 3 and how important that is. And one of the things we've always talked about as well is as great an indicator as Elliott Wave is, and of all the indicators that are out there, if I had to pick one, if you're only allowed to use one, Elliott Wave would be it. But Elliott Wave, among other indicators, are even better when they're supported or confirmed with additional indicators, and you just spend your time in trial and error and follow along with those indicators until you come up with those that you feel are reliable, or you can follow along with what we share with you and educate you on based on our own experiences. And one of the indicators that I really like is the DMI. And when we're looking at the DMI, we can see that the black line here, the ADX, that measures strength. This simply measures the strength of a move, not direction. It measures the strength. And then this green line here is the positive directional indicator, and you always want to see the ADX rising in between these two directional indicators. If the red line's on top, that just means it's a downtrend. If the green line's on top, it's an uptrend, because the green line, again, is the positive directional indicator, the red line is the negative. Well, when we see this here where we've had a crossover, where now the ADX is outside of that green line, what that's telling you is this is the strongest part of this move is over. Now, it doesn't mean that we're done and that we're ready to start this wave 4 retracement, because moves can still continue when they're not at their peak strength. But it does tell you that the strongest part of the move is over, and so we want to keep an eye on that. We've been listing all the other indicators or all the other signs to watch for on what could be occurring in the markets as far as when that long-awaited correction will ever show its face. So here's the SPY, where we bring volume into the mix, and you can see the volume has been very strong and been supportive of this move, confirming why Elliott Wave relabeled from a wave 5 to wave 3. It's a very strong move. Another thing that I wanted to show you, I'm going to go back to the chart of the SPX here, is there was a reversal day on Tuesday. This bar that's highlighted in blue here, I'll spread the chart out just a bit so you can see it a little bit better. And boy, this caused a lot of chatter on the financial networks, because we opened big to the upside and then we sold off and closed lower on the day. So it was a big reversal from a higher open to a lower close. And then if we go back to the SPY, we can see that there was above average volume on that Tuesday as well. So we had a good volume reversal. A lot of people thought at the end of the day Tuesday, is this it? Is this the start of the correction? And lo and behold, the very next day on Wednesday, we're right back to the upside. But it did cause a lot of potential correction chatter, at least for one day. Another thing to look at is the chart of the VIX here. You can see now we're starting to get a little bit of volatility. We talked about how the volatility would likely stay down through the whole holiday season, and it did. Now we're seeing some volatility creep back up. However, normally when volatility moves to the upside, it's because the market is moving lower, and we know that's not the case. The market has been moving to the upside. Historically, that's another sign that you can look at for a potential topping in the market, is when volatility starts to creep in before the market actually starts to reverse. So that tells you that there's a few people that are taking some money off the table. That's what happened on Tuesday with the reversal as well. Certainly not enough to cause a major reversal, just a one-day reversal, but more signs to look for. And then I did want to also share with you that bulls versus bears survey while we're talking about market sentiment. And last week we talked about how it had the widest spread in history. Well, we've made a new high at 66.7% in the bulls, and a low for the bears at 12.7. That's the lowest reading on the bears. Now remember, it hadn't been the highest on the bulls or the lowest on the bears. The spread between the two had been the most. But this is the lowest reading of the bearishness. So in surveying investment advisors and asking whether they're bullish or bearish, basically, it's the lowest reading since, are you ready for this? 1987. Anybody remember what happened in 1987? go back and look at the charts. So we've talked about this for a long period of time as well, that this market has been powering ahead. Nothing seems to stop it. But at least historically, and that's what technical traders do, Elliott Wave, all the indicators that we look at are based on history. The longer a market goes without a correction, the more severe the correction tends to be. And when we're starting to get these kind of comparisons, it certainly makes you sit up and take notice and be alert for your own portfolios. We had talked about how the Google case study had hit its Elliott Wave chart target right smack dead in the middle of the Wave 5, and then we had also looked at this butterfly as well on Mo, Altria, and we looked at it back when we were in the top of the Wave 3, and we said the Wave 3 could continue, or we could get the Wave forward reversal, and then, or correction I should say, it is a reversal, but correction is the appropriate term to use, and then move up to the Wave 5 extension. And based on Friday here, you can see the big move to the upside, as it appears that that move is underway now, reversing from that Wave 4 low up to the new potential target on the Wave 5, and we'll continue to watch this one. Looking at STZ, we've in this Wave 5. We had a little bit of a correction here, and we've got a real nice triangle forming here. Another one of the corrective patterns within Elliott Wave. Remember, they are zigzags, triangles, and flats. And then we can see here that we have this triangle, and that could very well yield the breakout to the upside that continues that Wave 5 up to the next extension level. But however, we always have to respect, I really like triangles because they show breakouts. They don't tell you which direction though. So you can kind of lean towards maybe to the upside because we're in an extended Wave 5, but also remember that in this Wave 5, it's already done what it's supposed to do. There's no guarantee we're going up to the next extension level, so we have to pay attention, and this triangle is a little bit of a warning sign, because if we do break to the downside out of this, then we'd want to take that butterfly off and just move on to another position. But it'll be very interesting to see how it breaks out of this triangle. But again, it could be the move to that extended Wave 5 target. But another one that I wanted to show you, and boy, there's a lot of neat things to look at from an Elliott Wave standpoint in this chart of CDW. Let's put the Elliott Wave on to start with, and you can see that we have a very nice Wave 5 pattern here, and we are in an extended Wave 5. We just went right past the 100% level by a little bit on that move up on Friday. But what I like about this pattern is it has a lot of different Elliott Wave characteristics in it, not just the traditional Wave 5 trending pattern that we talk so much about, but if we actually just take the Elliott Wave indicator off, and then we look at zigzag, which we've talked about, which is one of those corrective patterns, we also have a primary zigzag pattern, in addition to, or embedded in, I should say would be the correct way of putting it, the normal Wave 5 trending pattern. So there's your zigzag, and labeling this properly. Love this program because it allows you to just put all this on here so that you can see everything very clearly. So there's your wave, or A segment, the B segment, and then the extended 3. But let's look at our extension tool and see where the target would be just if we were trading this zigzag without trading the regular Elliott Wave pattern. And our target would be a 100% extension, so you can see the target would be up here right around 78. So that's where you could put another out of the money butterfly if you wanted to, and look for this pattern to continue. Again, we already have an extension in the Wave 5, so it could extend and hit this target here that also coincides with the target from the zigzag. Anytime you have more than one Elliott Wave pattern giving you the same target, that just makes it, common sense, that just makes it that much higher of a percentage of it happening. Again, there's never any guarantees, but we love it when there's more percentages in our favor. So let's take all this stuff off, and then one other thing I wanted to show you is there's another corrective pattern in here. Another one of those triangles, but this one is not a symmetrical triangle as we saw with the chart on STZ or Z as y'all say down under. But take a look at this series here of resistance the same highs. So we have a resistance line, and then we have a set of higher lows, which gives us an ascending triangle. We have symmetrical triangles, ascending and descending triangles. And so this is a ascending triangle, and then look what's happening. We're getting the breakout from the triangle, which is what's supposed to occur in a triangle pattern anyway. So think of all the things we have in this one chart. We have the triangle with the breakout. We have a wave 5 pattern that's showing the extension, even though the wave 5 pattern has already done everything it's supposed to do. A very classic wave 5 trending pattern. But then we have a zigzag that shows us that it could go a little bit higher and maybe is propelled from the breakout from this triangle. So lots of different things to look at here. And again, it puts a lot of percentages in our favor. Be interesting to watch this one as it goes and see how it plays out. Hope you had a wonderful week and a great weekend, and we'll be back to talk to you again next week. Take care, everybody.